Okay, good morning, ladies and gentlemen. Today, what I'm going to do is I'm going to break down the strategy that I want you guys to use from now on. Over the past few weeks, I've noticed a lot of a lot of students' issues and a lot of the problems you guys are having. You guys are looking at too small of a time frame, trying to see too big of a picture. Okay, so pay attention. I'm going to show you guys exactly how to eliminate that problem. Okay, for starters, open up. This is a basic chart. This is in pound USD. Okay, well, let's go back since we've been focusing on the euro. I'll go back to the euro. Empty chart. Okay, guys, this strategy is very strict. Do not detour from this strategy. If you are following me and using my trading strategy, do not use any other strategy other than what I'm about to show you right now. Take it into 2018 and you can go a long way. Okay. Now, of course, this is just a clear blank chart. What I'm going to do is I'm going to remove the graph. Control G. Remove your graph. This is on the MetaTrader 4 platform. Okay. Control G. Alright. But we are going to use Control Y. Alright. Now, monthly time frame. I'm on the monthly time frame. As a matter of fact, I'm going to customize this time frame. I want you guys looking at anything smaller. Put this back on here because you need this one. Anything smaller than a 15-minute time frame. So you can remove, right click, customize, and remove the 1 minute, 5 minute, and the 30-minute time chart. Select it, press remove. I want everybody to do that. Follow this video step by step. Alright. Line chart. We're on the monthly time frame. Line chart. Sorry. Okay. Now I have zoomed all the way out. Cannot zoom out anymore. Okay. We're going to go in twice. Okay. Now, sorry. Go in 3 times. Zoom all the way out. Zoom in 1, 2, 3. Okay. Now from here, we're going to look at our chart. This is what we see. So we'll take our horizontal line. Indicate it on the most recent pivots. 1 pivot, 2 pivot, 1 pivot, 2 pivots on the line chart. Okay. Then we'll go into the candles. Now let's go to the weekly. And we'll do the same thing. Except we'll do the most recent 8 pivots. 1 pivot. 2 pivot. 3 pivots. 4 pivot. Sorry. 4 pivot, 5 pivots, 6 pivot, 7 pivot, 8 pivot. Now we'll go to our candles. Now from here, we don't have to place any more horizontal lines. Now we're looking at different time frames. And from here, all we're looking at is we're paying attention to where these patterns are forming at these zones. We only use the monthly and the weekly to draw our pivots on the line chart. Now we are back on the candlesticks. We have zones marked. Okay. Once you do that on any currency, I'll do another currency pair for this video, but this is the first one. It's going to be Euro USD. We'll go to Insert, Indicators, Trend, Moving Average, and we'll add the 8. Simple. And it's going to be red. Okay. Insert, Indicators, Trend, Moving Average, 21. Exponential. Make that blue. Got it? Okay, guys. Change those colors. All right, the 8 moving average, simple, it's going to be blue. The 21 moving average, simple, exponential, is going to be red. Okay, now for this strategy, your red cross is your signal. Okay, when the red and the blue cross, that confirms that's uptrend. When the red's on the bottom, uptrend. Red on top, downtrend. Okay, but we have our zones that we marked on the monthly and the weekly. Now, if we look here on the monthly, we see this cross here. What did I just tell you guys? Cross confirms an uptrend. So on this particular monthly time frame, we're looking for an uptrend. Okay. For example, we can draw this low, connect to this low, close. Okay. Now, let's move forward. Monthly, weekly, daily, and this is where we're going to do some more work. Okay, we know from here to here is 1 month. From here to here is 1 month. We know that. Okay, so now looking at this chart, we can see that we're reaching a level here at the 19256. Okay, not on the daily, but this was drawn on either the weekly or the monthly, or both. So we're at a level of resistance. So in order to see exactly what's going on inside of this daily candle, we have to use the 4-hour chart. Okay, now same zone at the 19256, 4-hour chart, and what do we see? A cross. Just told you guys what that cross on this particular situation and strategy means. You can see it again here. You can see it again here. Okay. So back up to here. Now, here, what we can also see is we can see it beginning to go up. But now this is the 4-hour chart. Let me do one more thing. Here's an indicator that I use to help me with my time per candle. Okay, because you want to trade. You want to base all your decision making on whatever, never in the middle of a candle, or put it like this, never use your 4-hour candle. Enter upon 4-hour and 1-hour candle closes, complete closes. So the only time you really want to enter a trade, the safest place for you guys to enter a trade is going to be at the top of hours. So 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock, 6 o'clock, 7 o'clock. Never inside of an hour. Okay? Just to keep you guys on a straight and narrow, strict pattern, recognition, patience, timing, everything. You guys only enter trades at the top of the hour, or I recommend you only enter the trades at the top of an hour, at a whole hour time, at a whole hour. Okay, 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock, something of that nature. Okay. Now, this is a 4-hour chart again. Like I said, we see across here, here, here. Based on the monthly, we're in an uptrend because we have across here on the monthly as well. Okay, on the weekly, we had across here. Okay, now if you look, this cross on the weekly came slightly before this cross on the monthly. Okay, but let's go back a little more. Now back at the 4-hour chart, we see we're in a pushing up to this level. Hour chart, we're pushing up through this level, and we had a cross here, which is going to show on our 4-hour chart here. Okay. Now, if on the 15-minute chart, the 15-minute chart is going to come in handy for, as a matter of fact, I don't even want you guys using the 15-minute chart either. Matter of fact, I'm going to leave it there because we'll need it later on. But no, we don't. Scratch that. We're going to be very strict on this strategy because I have a lot of newcomers, and I want to eliminate the problem that you guys are having with these smaller time frames. So we have the monthly, weekly, daily, 4-hour, and 1-hour time frames. That's it. Nothing more, nothing less. We draw our horizontal lines for support and resistance on the monthly and the weekly. Nothing more, nothing less. Okay. We're only identifying trades at these levels that we've drawn using the monthly and the weekly. Okay, based on the levels we've drawn on the monthly and the weekly time frames, we can go further to look for patterns at these levels. Okay, guys, I want you guys to start focusing on the bigger picture and not just in and out. So, like for instance, I want you guys to focus on weekly long-term trades rather than a trade that you expect to last for an hour. Okay, focus on trades that are going to take you from 1.17 all the way to 1.19, rather 1.85 to 1.9. Okay, so again, we're on the horizontal support and resistance on the monthly, the weekly, using our line chart. Now here the 4-hour is where we will begin to look for patterns. 1 hour, 4 hour, daily. Okay. Now if we look here, we are definitely at a level here on our daily chart. So what we're going to need to do is identify a pattern that's forming here in the 4-hour chart. Just a moment, I'm loading up our reversal patterns image. Okay. Now using this chart is how we'll get assistance with identifying our chart patterns. Okay, so with that being said, we are getting a pattern here at this 1.256 level. Okay, we are getting a pattern here. Now our job is to identify the pattern. Okay, this is the 4-hour chart. 4-hour chart. Now, when you're looking at these patterns and you're seeing a bearish engulfing, a bullish engulfing is the same thing, just flipped. See a bearish harami, same thing as a bullish harami, except it's flipped. Okay? Definitely want you guys to to be able to identify things of that nature. Now, mind you, this particular candle doesn't close until 5 a.m. So we have 3 hours for this particular candle to close. Now, here on the hour, we just had an hour candle close. Okay. So let's take a look. Now, it takes at least 2 to 3 candles for one of these patterns to appear. If you look across the board, 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 1, 2, 3, 1, 2, 3, 4, 1, 2, 3, 4, 5. Okay, so it takes typically 3 to 4 or 5 candles for us a particular pattern to form. So looking at this one, do we have a pattern? And the answer is no. Because in this situation, we're looking for a pattern to form and close right at this level. So the answer to do we have a pattern is no. Okay, so no, we do not have a pattern yet. This is where your patience comes in. Although we have marked our zones, we need to check back. Since we do not have a pattern at this hour, we need to check back at the next hour. In the meantime, we will pull up another pair. We're going to pull up another pair of the pound, and we'll do the same exact thing from scratch. So, Control G, Control Y. I'm sorry, didn't mean to do that. Now we're looking at the pound dollar candlesticks, monthly, 4 pivots, 1, 2, 3, 4 candles. And just because we don't have a pivot on top of price, now we do not have a pivot above price anywhere. So let's put one at the closest pivot to current price, which is here. Okay, now candles. Now, from here, what we're going to do, so we're going to go to the weekly, and we're going to do the past 8 pivots. 1, 2, 3, 4, 5, 6, 7, 8 candles. Bingo. This is what we have on our charts. Levels. Now, insert indicators, trend, moving average, 21. I believe that's going to be blue. Insert indicators, trend, moving average, red, 8, simple. Got it? Good. Now, look at the daily, 4 hour, Okay, so we have done our work on our monthly and our weekly charts. Now we can use our daily and beyond to identify patterns at those zones. Here on the weekly, we have not even reached the next zone yet. So we still have 80 pips from 35,185 to 35,9 before we can even look or even expect price to turn around. The daily is showing that here at the most previous level at the 34,141, we clearly see support. The next potential zone of resistance is 35,949 here. Okay, also, if you look here, we have our cross. On the 4 hour, we're riding the wave. The 1 hour, we're riding away from here. All right, so everybody can pretty much see that there. Now, trend lines. We'll do trend lines from the monthly, weekly, and daily as well. So going back to the Euro USD, let's go to the monthly and let's draw some trend lines. Now for the trend lines, zoom all the way out, zoom in once, twice, and look on your chart. What do we see? We see a high, well, let's go from left to right. We see a low, high, low, high, low, high, low, high. Okay, so if we wanted, if back here in November 2001, we could have drawn a trend line like this. And with that trend line drawn here, based on this low, we would have known, we were of course still in an uptrend, but we would have known at the break right here, that we were shifting to a downtrend. Now, based on the highs and lows, after this we have a low, high, low, high. Here, we have a low and a lower high. So a lower high than the previous high confirms the trend could possibly be changing or going into a range. We have a high, low, lower high, lower low, slightly lower high, slightly lower low, lower high. We can connect these lower highs to form a trend line. It would be from this one, the first two. And you see it goes straight through. We want them to be more accurate than that. So we're going to go through here because we get 2 touches on this one. We only got 1 on that one. Big difference. We get 2 touches on this line, well 3 touches, 1, 2, 3. On this one, from here to here, we would have only got 2, which would have been 1, 2. The more the better. Okay, so there's our some more trend lines. We can remove this one. And here we'll be able to see that upon this cross, we're potentially moving still continuously to the upside. Zoom in some more. Okay, now that we've drawn our trend line, we can zoom back in. We can go to the weekly. Let's zoom back out a little bit. Weekly, we zoom out. We can see the trend. Daily, we can see a trend. But we're looking at the weekly and the monthly. Okay, this strategy is going to give you some huge pip gains. All you're going to have to really do is sit back, be patient, and wait for that pair to present itself. There's hundreds of currency pairs. I'm not going to say millions. Excuse me. There's hundreds of currency pairs. So with that being said, when you do your analysis and your breakdown, and you don't have a pattern or a significant level being breached or a pattern forming at that level, go to another currency pair. You have no reason to force what you want to see on a chart. I just told you what you want to look for. Everything you want to look for. If you don't see it, it's not there. I'm going to say that again. If you don't see it, it is not there. Okay. Now, let's say it again. If you don't see it, it is not there. Again. Now, you know what? If you don't see it, it's not there. And what I'm actually going to do is we're going to take the hour candle off. Let me see something here. No, we'll leave the hour candle on there anyway. But, okay, I'm on the 4-hour chart. Okay. If you don't see it, it's not there. 4-hour candles are going to be your most significant candle closes that you want to really eyeball. Okay. So the 4-hour candles, write this down, it's Eastern. The 4-hour candles close at 1 a.m., 5 a.m., and 9 a.m., 1 p.m., 5 p.m., and 9 p.m. 6 per day. Okay, that's 1 a.m., 5 a.m., 9 a.m. Eastern, 1 p.m., 5 p.m., 9 p.m. Eastern. The most significant candles are going to close at 1 a.m., 5 a.m., or 9 a.m. Okay, 1 a.m., 5 a.m., or 9 a.m. But there's 6 per day, a.m. and p.m., 1, 5, 9. Okay, at those times are going to be when you're looking for your entry. Stick to those 6 times only. 1 a.m., 5 a.m., 9 a.m. Okay, practice that. 1 a.m., 5 a.m., 9 a.m. After you broke down your chart, those are the times you're going to want to execute your trades and identify the patterns. Okay? Now, as you see, when we are trending above the moving averages, we are in an uptrend. Retrace, pullback, uptrend. Okay? Alright. Back to the pound. Same thing. Okay? Now, I'm also going to show you guys how you can apply. I'm going to show you guys how you can apply your Fibonacci. Okay? Fibonacci. When you're looking at your chart, let's say I really want to use let's use the weekly. Oh no, let's use the 4-hour. Okay, we're going to use the 4-hour chart. When we're using this 4-hour chart, we want to count from left to right. And we're identifying the swing highs and the lows. Okay, we have a swing low, a swing high, a swing low, a swing high, a swing low, a swing high, low, double bottom before trend. So let's draw our Fibonacci from this, because we want to draw a Fibonacci after a rally. Okay, what I mean by rally is, not a slow move like that, but an aggressive move like this. Here, a real strong, bold, and aggressive, bold and aggressive. We'll take our Fibonacci, draw from that high to that low. Okay, and we're going wick to wick. Okay. Again, that's the 4-hour chart that you're using for your Fibonacci. Zoomed all the way out. It's 1, 2. 2 clicks on the zoom in. All right. And just whatever, let's do the same thing that I just did with the Fibonacci on the euro. We'll do it on the pound. 4-hour. Zoom all the way out. 1, 2. Most recent rally. What is that? If we look at this chart, where do you see the rally? Here. Fibonacci. That swing high to that swing low. Okay. Now, if we were looking for this trend to continue down, which we clearly can see the moving averages are pointing up, but if we were anticipating this to trend down, our resistance level would be here. It's 61. The 50 here, or the 31.8. Clearly it wasn't the 31.8. We got a cross right here at the 31.8. So that's a cross right here at the 31.8. So we know we're still headed on the upside. But based on this Fibonacci sequence, we can look for price to continue up to possibly the extension. We have 100, pretty much, it's broken 100% right here. It's broken that. So now we'll look for a pattern at the 161.8. It's broken that. The next area is the 261.8. But we have to remember we have this level of resistance here. Okay. Weekly. On the this now we're back to the Euro USD. Same thing I showed you before. Rally, high, low. If we were anticipating it still going down, we would have looked for a reversal at the 38.50 or the 61.8. We clearly broke 100 level. We broke 100 level, resistance, resistance, broke through, now support. Resistance, resistance, broke through, now support with a cross. What does that tell me? We are going up further. Okay? Now, let's go to the daily. Our next potential zone is going to be here at the 161.8. But looking at the 161.8 Fibonacci, our next level of resistance isn't right here until the 2276. So this Fibonacci number here is technically in space. But we'll also, of course, get a pattern. So it doesn't matter. We'll get a pattern there. It's going to be at this 161.8 or this 20276. But as I stated, this strategy is going to be very, very strict for you guys. So with that being said, we're only trading at the close of the 4-hour candles. So you're not even looking for a reversal until you get a 4-hour candle that closes up in here. And those are 1:59 a.m. and p.m. So at 1:05 a.m. and p.m., no matter what day of the week it is, if you don't get a candle to close up here near this level, then you're still focused on buys. When you get that 4-hour candle to close in here, you can then determine what pattern you're seeing on the 1-hour and 4-hour chart. And then you'll determine if it's going to continue up to the 261.8, which in my opinion, yes, it will, because that is where the trend line is. The trend line's up here at 261.8. All right. So that's pretty much, we'll do one more pair. A random pair. Let's look at the USD-CHF. Okay, guys, we're going to do it step by step. We're going to hit our 2 scrolls. Control G, Control Y. Candles. Zoom in. Go to the month. Line chart. Most recent 4 pivots. 1, 2, 3, 4, 5. We'll go ahead and do them right here since it's so close. 5. Okay, now from here, let's zoom in. Well, now we're going to go to the weekly now. We're going to do the most recent 8 pivots. 1, 2, 3, 4, 5, which would have been this one, 5, 6, 7, 8. Okay, so now we have 8 pivots. Now let's come in here to the candlesticks. Okay, monthly, we're doing 4. Weekly, we're doing 8. Now we can get in here in the weekly and dailies and see what we got, but not before we add our moving averages. Eight, red. 21, exponential, blue. Okay, now looking at this currency pair, we can see a cross here right off the bat on the daily. browser that. But let's go to the 4 hour. 4 hour is where we're looking for our trade entries. Okay. So here we have a double top on the 4 hour chart. Let's go ahead and draw a trend line. We'll draw a trend line on the monthly. Well, first and foremost, start at your highest time frame and work your way down until you identify a trend, which is a series of higher highs or lower lows. Nothing showing clear on the monthly. Nothing showing clear on the weekly. Nothing showing clear on the daily. Very, very clear here on the 4 hour. High, low, high, low, high, low, high, low. See if we can get some touches in here. Which we can. On the 4 hour, here we go with our touches. Trend line. Okay, trend line, we got a cross here. Got a cross here. So let's go to the hour. On the hourly chart, we have a cross here. Okay, so with that being said, our potential next area for this is going to be here. But let's add our Fibonacci. Okay. Zoom all the way out. 1, 2. And here we can see that there was a rally from this high to this low. So let's take our Fibonacci and go from this high to this initial low, which is here. Okay. Now, as I stated before, if we were anticipating that the euro or the euro USD were going down, we would have turned around at the 31, the 38, the 50, or the 61. But we didn't, so we're looking for a higher push. But on the USD CHF, going from high to low, we'd be looking for a reversal at the 31, the 50, or the 61.8. In this situation, we had a trend line touch at the 50. So we had two confirmations. We had a rejection as a trend line, the 50 retracement for the Fibonacci, as well as a cross here. So this level here would have been your entry zone. 1 second, guys. Okay, so we can anticipate this going down here, being rejected from the 61, the 50, and the 31. We expect it to come back to at least full 100% retracement or beyond. Okay, now also what I do want to point out is now that we do see we have a confirmed reversal here, we can eliminate this complete Fibonacci, and now we can use the new swing low to the new swing high and do the same thing backwards. Okay, now we would be looking for, if we were continuing up, we would look for a reversal at the 31, 38, the 50, or the 61. If we breach these levels, we're going, if we have breached these levels here, we're going to the 100, the 61.8, or beyond. Alright, ladies and gentlemen, and I'm going to go ahead and wrap this video up, and thank you for watching. Watch it as many times as you need. It's here for you to watch numerous times again. Make sure you take notes and watch it more than once. Take notes and watch this video more than once. Alright, thank you for tuning in. Happy trading, and let's kill it. All 2018.